Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, February the 10th. The year's 2025. Let's talk trading, weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. And the usual friendly reminder of risk management. Never lose more than you're willing to lose on any one single trade. And before we get started, hey, how about them chickens, aka the Philadelphia Eagles, took out the Kansas City Chiefs? Yay! I was tired of the Chiefs. Okay, so let's get to trading. We can see that we still have a couple of gaps that have not filled. Looks like it's on the Canadian pairs this time. I wonder if it has anything to do with the tariffs that Trump's threatening. He may have already put them in because it is 9 o'clock, after 9 o'clock East Coast time right now. So the pound, we are 16 pips above, now 17 above the weekly open, 40 off the high and 17 off the low. And as I say, you can see we're live and those numbers just changed by a pip. We're putting in today's opening range. We are in the opening range for the year. And we're also inside the opening range for the month. For the year, we're 128 pips below the yearly open, 193 off the high and 283 off the low. Let's see, Friday was an inside bar. We just crossed back into it at the 123.76 level. And you can see we've got a lot of monthly inside bar action. Got a handful or so on the daily. Taking a look at the ranges, we can see that the pound yen's leading the way as the beast normally does at 212 pips. And euro yen's picking up that pace at 185. And it looks like all the yen pairs, lots of movement. There's a bank holiday in Japan today. I wonder if that's one of the reasons. You can see here on the buy zone, price left it in the Asian session and might return to it shortly. Looks like the range is large enough to trade the rat zone, so green rats get ready. Red rats have already feasted. For the Bambino Flex indicator, it says to go short. Bias near the pivot was short. You see we got near the pivot, but we didn't quite take it out. But that paid off. We did hit the weekly pivot. So we've got a missed pivot today. We took out the week so far, and we've taken out the month. So we are in the lower wick zone of the previous trading day's candle, which was Friday. So we'll have to see which way price wants to crawl out of the wick zone. And since the range on the pound's only 56.9, it might want to expand. So if that's the case, it'll probably come down to the weekly open and cross over it. And I did make a video on Friday. Sometimes I just need a day off, and Friday was one of those days. We had a 301 pip weekly range last week, which puts us at the 75 percentile out of the last 12 weeks. And that week was, you can see here, it was an outside bar. And we broke out of the previous week's high last week by 27 pips. We broke out of the previous week's low by 137. And something looks interesting. I gotta double check something here. Let me switch time frames and then switch back. This looks like this should have been an inside bar, but for some strange reason, the indicator's not painting that as an inside bar. I'm wondering why. That's interesting. I'll have to take a look. That's an old indicator. And to tell you the truth, it's not one of mine. So I'm wondering why that didn't paint it. Huh. Okay, so this week, high minus close, 41. Close minus low, 15. So it looks like the red rats paid off already. Green rats, you gotta wait. High minus open, 57. And open minus low, 0. So I would think this number might change this week. We'll have to wait and see. Okay, looking at some of the trading charts here, even though some of the other ones were trading charts too. But for the price action simple, you see we broke out of the low of the previous M30, approaching that daily low, or actually approaching Friday's daily low, only 2 so pips to see if it breaks it. It's right near the 75 psychological, and H4 is red from the top of the hour, which was the new H4 candle on my charts. You can see here we're putting in a 3 ball. And we will definitely have a lower high when this candle closes. As you can see there, lower high was put in. Now, this is one of those trades where you have to be careful if you're looking to go long in reverse here. I wouldn't take it. One of the reasons is I've seen this happen before. That 3 ball usually likes to push down a ways. And I also need to see a flip, flop, flip before I want to go long. Now, sometimes you'll miss out. Like, for example, here, a flip flop would have paid off, but actually probably would have taken the highest low trade there rather than a flip flop. Here, you see you got a flip, flop, flip, flop, flip. So once again, taking the highest low trade would have worked. And here you only have a flip flop but I would have taken that trade. Why? You see that gap right there? Gaps don't like to exist. So that's why sometimes we say look left. And so right there, if you're taking that trade, so you see the 3-ball push. Here's a 3-ball push down once, twice, 3 times. I like to wait sometimes for at least 3 pushes. So actually, yeah. So there was a push down from here to here. 1, 2, 3. Actually, there was 4 pushes. And there was a quick 2 pips to be had. Once again, looking at price action, when you see this big move here, price almost always likes to return to this area here, which some would call the order block. And as I'm speaking, price returned to that order block. And so, you know, that's one of the reasons why I still like to look at other people's methods, see what they're seeing. I might learn something new. I might learn something useful. And right there, that was one of the cases. Knowing that when you see the price leave that zone, it almost always returns. Not necessarily on the same candle or the next candle, but it likes to return to that area or close to it. And you can see here, here's that order block almost right here at this line. You can see price return to it once, twice, but failed to break it, and so it just dropped down again. So that's something I picked up from the market structure traders. And even though this is a 1-minute chart, you see if anything is robust and the time frame doesn't matter, you can apply it to all time frames. And that's one of the reasons why I don't like squigglies, because you can apply them to all time frames, but you know, if you look at one time frame and you look at a second time frame, you get different different readings. And you know, I like things that pretty much stay the same across. But market structure, you have a market structure for this time frame and you have a market structure for a different one, and who knows, maybe this is the same. You might have seen this on the 5 or the M30 or something. And once again, you see we broke through that lowest high. Looks like it was good for a pip or so. So let's see what happens here. Well, actually, a couple other charts to look at quickly. Price turn here on the wick zones. Actually, you can look at the M1. You have a price turn there. Ooh, no lower M5 price turn. You got overlapping areas here. Same on M30. Very interesting. We're hitting that 75 psychological level. Only 78 pips, or 78% on the ATR, which is bad coming out of the first week. And you know what, traders? We haven't pushed the range. And that just about does it for time here. So, I hope you enjoyed the Eagles win on the Super Bowl as much as I did. Tell you the truth, I didn't watch the game because I didn't want to see Kansas City win. So, remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One.